The year is 1992, and this is the Bombay Stock Exchange, or BSE. India's oldest and largest stock exchange located in the heart of India's financial capital, Mumbai. The Hindi name of the BSE is something that translates to Society of Stock and Share Brokers. This was the very first stock exchange to be established in India way back in 1950. Now picture this. There's a man named Harshad Mehta who becomes the face of the BSE, a man whose name would eventually become synonymous with a massive scam that rocked the entire Indian stock market. And in today's video, we will tell you all about it. So let's get started. Harshad Mehta was born on May 4th, 1949 in Mumbai. He was raised in a middle-class family and did his schooling from St. Mary's High School in Mumbai. After completing his schooling, he went on to graduate with a Bachelor of Commerce degree from the University of Mumbai. Right after graduating, he joined his father's brokerage firm as a clerk, where he earned a salary of rupees 2,500 per month. Eventually, he became a member of the Bombay Stock Exchange at the age of 30, and by the end of the 1980s, he established himself as one of the leading brokers at the BSE. So what exactly was happening at that time? Back in those days, banks would submit their monthly returns to the Reserve Bank of India, along with details of their branch managers. The RBI then used this data to compile its weekly statistical publication called the Monthly Bulletin. Now, Harshad Mehta noticed something peculiar. The RBI Bulletin would publish consolidated figures for all the branches of a bank, but it wouldn't include data for individual branches. This wasn't necessarily a big deal, but Harshad Mehta found a loophole here. You see, if a bank had multiple branches, the manager of one of the branches could go ahead and forge some documents and show fictitious profits on behalf of that branch. For example, the manager of a bank branch in Kanpur could forge some documents showing huge profits for that branch. But there was one condition. The amount shown in the profit should not match the amount shown in the loss of another branch of the same bank. If that were to happen, then the consolidated figures would have revealed the scam. But that wasn't really a problem, because each branch submitted data independently, and they were never compared with other branches. And thus Harshad Mehta saw an opportunity to make a lot of money here. His plan was simple. He would go to a bank and ask the branch manager to sell some shares on his behalf. Then he would turn around and sell the same shares to another bank. Since the transaction involved two different banks, there was no chance of them comparing notes. Now, in both these cases, the bank would book profits based on the forged documents of the branch manager. In the process, Harshad Mehta would earn commissions on both sides of the transaction. The only catch was that he needed banks that were willing to take part in this scam. In fact, he needed banks that were already under investigation for their shady practices. One such bank was the New Delhi-based Global Trust Bank, which was owned by the multi-millionaire, the infamous Madhav Thakur. The reason why Madhav Thakur wanted to participate in this scam is that his bank had been placed under the RBI's restricted list due to its involvement in several scams. To explain this, we need to understand something called the Brady List. Now, the Brady List isn't some sort of secret society. It's actually a term coined by the Wall Street Journal that refers to a list of banks that are supposedly on the verge of bankruptcy. Now, when a bank gets included in this list, international investors start pulling their money out of the country, and in this process, the domestic currency of that country starts depreciating. As you can imagine, being on the Brady list is a bad thing for any bank. And as far as the Global Trust Bank was concerned, it was already on the Brady list. But here's where Harshad Mehta comes into the picture. He promised to pull some strings and get the name of Madhav Thakur's bank removed from the Bradley list, and so their partnership began. The next step was to find some unsuspecting investors who would buy the fake shares that were traded between the two banks. This is where Harshad Mehta turned to celebrities like Bollywood actor Chunky Pandey, cricketer Manoj, Prabhakar, and even the famous magician P.C. Sorcar Jr. The idea was that these celebrities would lend their names and prestige to these companies, so that investors would feel safe putting their money in. It was also around this time that Harshad Mehta came up with two unique methods to artificially pump up the price of these stocks. These methods would later come to be known as circular trading and money looping. Now let's understand how circular trading works. Let's say you own 100 shares of company A, and you want to increase its share price. So you go to the stock market and place a buy order for 100 more shares of the same company at a price that is higher than the prevailing market price. Now, if your buy order goes through, then the price of the stock will rise. But this is obviously a sham because you're buying shares from yourself. That's why it's called circular trading. And that's just half the story, because once the price of company A increases, you would obviously make a profit on your initial investment of 100 shares. But how do you make sure that you don't make a loss on the 100 shares that you just bought? Well, you simply repeat the same trick with another company. You go to the stock market and sell 100 shares of the second company at a price that is higher than the prevailing market price. And if your order goes through, then the price of the stock will rise. Now you've successfully transferred your losses to the second company. And this is what Harshad Mehta did with several stocks over the years. He kept transferring his losses from one company to another like a game of musical chairs. But eventually the music stopped, and Harshad Mehta couldn't find a chair to sit on. In fact, the crash happened right after he tried to manipulate the share price of a company called ACC. ACC was a cement manufacturing company that had received a huge order to supply cement for the construction of the Bombay Stock Exchange building. It was also the single largest order ever given to any cement manufacturer at that point. And so, when Harshad Mehta tried to manipulate the price of ACC shares by placing fictitious buy orders, the company's management got suspicious and refused to entertain his orders. This was followed by the collapse of the bull run in the Indian markets. Investors were left high and dry, and within weeks, Harshad Mehta's empire came crashing down. Now that his scam was exposed, he was arrested and taken to the Arthur Road jail in Mumbai. Inside the prison, he continued his stock trading activities and made a lot of money. So much so that he was shifted to the more secure Narauli jail. Soon enough, the government intervened, and his trading account was frozen. This was done to protect the interests of the investors. Now, Harshad Mehta wasn't the only one who was arrested. Several other brokers and bankers were also taken into custody, including Madhav Thakur, who later died of a heart attack. Interestingly, the judge who sentenced Harshad Mehta was himself the target of a major scam that was orchestrated by the very same Harshad Mehta. The judge's name was Justice V.N. Kher, and he was given life imprisonment for taking bribes worth $2 million from Harshad Mehta. But this didn't bring any solace to the investors. In total, the scam wiped out more than $6 billion from the market. And that was a lot of money back in 1992. In fact, the chairman of SEBI, the Securities and Exchange Board of India, once said that the cumulative impact of the scam was such that the net worth of the investors fell by approximately 30%. In addition to this, the scam also took away the trust of investors in the stock market. In fact, it was estimated that the number of investor accounts opened in the BSE fell by 70% in the period between 1992 and 1995. Although Harshad Mehta was released from jail in 1996, he continued to remain a tainted figure in the Indian markets. And the BSE did everything it could to distance itself from the scam. For example, the iconic dome of the BSE that was built in 1992 was initially named the Harshad Mehta Dome.
However,
after the scam broke out, the BSE's board of directors decided to rename the structure the Feroz Gigi Boy Dome after a former chairman of the exchange. And that's not the only thing they changed. They also introduced sweeping reforms to ensure that such a scam never repeated itself. First off, the BSE revised its listing agreement with listed entities, especially with respect to related party transactions. Then they came up with a code of conduct for members and their employees. Also, measures were taken to improve the surveillance mechanism. Moreover, the BSE set up an independent inspection department to monitor and inspect the affairs of the members. And finally, it launched a membership democratization drive that allowed anyone to become a broker, provided they passed the required exams. The results were almost immediate. The BSE bounced back in no time and soon became the most respected stock exchange in the country. As for Harshad Mehta, he faded into oblivion after the scam. Although he was never directly involved in any other major scam, he remained a controversial figure till the day he died. In fact, there were rumors that he was the inspiration behind the 2000 Bollywood blockbuster movie Mohabbateen, although this was never officially confirmed. On June 2001, Harshad Mehta suffered a fatal heart attack at the age of 52. He was cremated at the Shivaji Park in Mumbai, and his death left many unanswered questions. Some people felt that he was killed, while others believed that his death was nothing more than a tragic coincidence. Whatever may have caused his death, his legacy lived on. Even today, the 1992 scam is considered to be one of the biggest financial scams in the history of India. And it serves as a reminder of how greed and ambition can sometimes go beyond one's limits. So the next time you hear someone bragging about making quick money in the stock market, remember the legend of Harshad Mehta. Thank you for watching.